Hello, Trading Terminal subscribers and Beryl Traders YouTube subscribers. Welcome to this week's weekly market recap. Tons of amazing stuff happened this week. We got the JOLTS job opening numbers that came out and moved the market. We had the ISM numbers, service, as well as ISM new orders data that came out. So lots of really new information, as well as a few Fed speakers that talked about the market and what the Fed needs to do. Very jam-packed week, but before we get into it and dissect the week and stuff that has happened, I know a lot of you don't actually watch the videos until the end, so I want to give really a couple of important announcements right now before we actually start. So on our Trading Terminal Academy for the Good Friday and Easter, we're running a little promo where you can access basically all the essential courses through a bundle for a discounted price of $19.99. So that will get you access to Credit's course, 12 minutes to market ready, Brian's course, swing trading for beginners, a couple of Mike's course, as well as my course. And we're adding 2 new courses to the Academy as well, which hopefully will be ready by end of April. One of them is on bigger picture market top-down trading that I'm creating, and another one's advanced option trading, where I'm talking about calendar spread, diagonal spread, butterflies, some really cool strategies, and they will be added to the bundle as well. So we want to keep this as affordable as possible for our members. And the other announcement that I had is a friend of the show and one of my friends, Jared Dillian, used to work at Lehman Brothers. He came on our show one time in After Hours with Traders. He's released a new book called Those Bastards. Definitely check this out. I'll put a link in the video description. Check this book out. It's basically 69 essays on life, music, culture, sex. It's really not about trading, but Jared is a fantastic writer. So if you want some introspective writing, this is definitely a good pickup for the weekend. So let's get started. Market today, we're recording this on Wednesday. It's a shorter week. Friday is off. Market finished the day red, especially NASDAQ down another 1%. IWM is really struggling with the regional banks. On the sector side, you'll see a lot of the defensive names, utility, healthcare, are actually outperforming. Utilities up 5%. So, a lot of people are talking about risk on. This is not really a risk on behavior when you see a utility really outperforming by this amount. And let's go to our calendar page. We didn't have a lot of notable earnings or important earnings, but on the economic side, it was quite a busy week. So I want to actually digest some of the numbers that came out and review them with you really quickly and see how we can trade them. On Monday, we had the PMI numbers. So these came out lower than expected, again, showing a deceleration in the economy. This is Purchasing Manager Index. They talked to about 3,000 to 4,000 purchasing manager, asked them their opinion about where they think the market's going, their prices. So this was down. Same story with ISM Manufacturing PMI. This was also lower than expected, again, signaling that recession talk that we've been talking about. On Tuesday, we had the JOLTS number. So these are job opening. There was a major drop. We came below the 10 million finally. We're at 9 million something. It's still, the labor market is still really tight, but it shows that that little extra slack that Fed is really looking for is actually happening in the job market. Today, we had some mortgage applications, some imports data, and then tomorrow, we're going to have a jobless claim. And Friday, even though the market's closed, we're still going to get employment data. So keep an eye on Friday data and how it would impact the Monday's open. So definitely pay attention to that as well. So I have a few slides available that I wanted to go through, and hopefully this would help you with your trading this week. So number one is the JOLTS data. As I said, JOLTS finally came below the 10 million, so it's finally coming down. But when you compare it to pre-pandemic levels in the 2020s and the 2019s, it was around 6 to 7 million. So it's still highly elevated, showcasing that the job market is very, very tight. Another really interesting data that I saw is that right now, for every one unemployed person in America, there's 2 jobs opening. So it has never been a good time to be kind of an employee, right? So there's so much job opening, and that's why the quit rates are really high. So despite fear of recession, the job market, the labor market still remains very, very strong, but it shows some sign of loosening. But one of the key questions that everybody asks, and if you go ahead and look at QQQ, which is the Nasdaq, let's go to our trading terminal, let's go to our charting. One of the key questions that everyone's asking: so how come the market is rallying? You know, are you telling us there's a recession happening? How come the Qs are up almost 20% from the lows? So if you take a look at the lows, almost 20% from the lows of 260. So what's happening? What's causing this? Are we going to go down or are we going to go up? So let's actually, in order to answer these questions, we got to look at the breadth of the market and actually dissect this. So when you look at the Nasdaq QQQ or Nasdaq 100, which is the top 100 technology stock, and you compare them with the Nasdaq Composite, so that is over 3,000 stocks in there. So all the companies that are listed on the Nasdaq exchange, you see that there is a massive divergence, a spread between the NDX, which is the QQQ, and the actual Nasdaq Composite, CCMP, which is all the stocks that are listed on Nasdaq. That spread is widening. So these usually move really closely together. So you can see even in 2000, they swing a little bit, but now all of a sudden you got this massive divergence. And this is basically what it's showing you is a lot of the rallies is because of the large caps. As a matter of fact, 90% of the movement in Nasdaq could be explained by just 6 stocks in the last 2 months. I have another interesting data point that I wanted to show you, and that's basically for S&P 500, the top 20 largest stocks in the last 2 months, since January, in the last 3 months, have added almost $2 trillion. 480 other stocks have only added 170 billion. So this great 20% rally that you saw in the market is really made by just 20 stocks, just a handful of stocks. As a matter of fact, really 10 stocks: Apple, Microsoft, Google's, those mega cap names. So can they continue? I don't think so. I think this rally is going to be short-lived, and we're going to get another massive pullback in the market. But why do I say that? Do I have any sign in some things that I'm seeing? Absolutely. So when you look at utilities, massive strong move. You don't usually see these type of movement in a bull market from utility. We know utility is really a risk-off sector. It shows that we might be heading to the recession, and it's performing like one, signaling that. What about any other information? Absolutely. So from the ISM numbers that came out in Monday that I talked to you about, if you look at the new orders minus inventory, it has been the most negative it's been since the last 20 years. Almost the last 20 years, if you go back 20 years, it has never been this negative. It got this negative in COVID, a little bit in the crash of 2008, but we're in the 2008 level. So when you're looking at new orders minus inventory, that shows you that new orders are down and inventories are up. So that really signals that there is no demand. So demand is falling off the cliff. And when usually demand fall off the cliff, what happens is revenues go down. And when revenues go down, what happens is earnings go down. And when earnings go down, what happens? Usually stocks go down. So stocks are the legs to fall. So there's still more room lower. On the price side, we're seeing the same thing. So prices paid are coming down by a lot, especially on the PMI side. We're seeing that. And again, this could be signaling some kind of a recessionary vibe as well. And then the last piece of information that I want to share with you, hopefully will help you with your trading, is usually when you're looking at relative performance of S&P 500 to 20-year treasuries and Brent crude, they move hand in hand. So when crude is going up, S&P outperform TLT. So this let's think of it as TLT. S&P outperform TLT. But when crude is going down, TLT outperforms S&P. But you can kind of see in the beginning of the 2023, there has been this divergence of oil is going down, but S&P is still outperforming TLT. And we believe at Peak Capital Trading, as well as my personal view with Trading Terminal, is that this divergence is actually they're gonna converge, and it's gonna collapse, and it would happen by oil continuing to go down and TLT outperforming S&P 500. And that is why we're long TLT through shorting some puts and buying some long dated call. That's one of our highest conviction trades this quarter and this year is long TLT. And that's why we sold some 470 SPY calls, and I'll talk about this in a moment, to really showcase this view that S&P in compared to TNT is gonna underperform. So let's go to the chart, and I want to show you this really quickly as well on what we're doing. So if I go to the TLT chart, and this is the 20-year treasury, you can see that it's slowly moving higher. So let me go back a little. You can kind of see that it's slowly grinding higher, slowly going higher. So what we believe is that if we can break this level of resistance on the yields and go below the 3%, we think we're gonna go and finish the year somewhere around the 120 mark. And what we've been doing is consistently selling puts, rolling them up higher and higher, and buying some long dated calls. So that's how we're playing the TLT. And for SPY, we're shorting it synthetically through call options. So let's take a look at that trade as well. For SPY, we think we're really gonna play in this narrow range, probably come down again, maybe move higher, come down, move higher. We're gonna play in this narrow range. So what we've been doing is we sold some October calls right at this level of one of the rallies at right around 470. We've sold some calls on SPY expiry October. So this is how we're really playing our fundamental and macro views. So hopefully this gave you some ideas for trading. Definitely a busy week. We'll see you next week. Don't forget about the Trading Terminal Academy promotion, and feel free to check out this book by Jared Dillian, a friend of the show. Thanks for that, and we'll see you next week, and happy Easter.